Hey guys, Jonathan Rose, owner, mastered in trading, and phase energy. So to get the full background of the why we got into the earnings trade, please go back and watch that first video. This video, we're going to talk about, I have the trade, how we're going to manage the trade. So the original trade, ideally, I wanted to do a strangle because I wanted to take advantage of inexpensive volatility. But instead of doing a strangle, which would be buying a put and buying a call, because I was bearish the overall market, what I decided to do was with EMF, buy a put first. Buy a put first, then the plan is to wait as the market falls, as EMF falls with the market, then we would slowly buy calls, and that's a way that we would leg into a favorable price in the strangle. Now, what does that mean? Leg, if you do a straddle or a strangle, you do both sides. If you leg, you're doing one side and then waiting for the other side. So I look at this not as being long puts. I look at this as I'm going to put on a strangle before EMF releases earnings. But I did so by starting with buying puts. So here's what I did. So EMF, these are all my trades. Again, I told you I was going to walk you through every trade that I make. April 8th, this one expired. I never got filled. April 8th, the next day, I bought 5 of the 30 puts for $230. I'm always going to ladder into a trade. So I bought 5 and then I bought another 5 at $1.80. So right here, I had a total of long 10 puts in EMF. And again, the plan, wait, let the market come off, EMF will sell off, and then slowly buy the calls. Well, what ended up happening is the market rallied. I was surprised. The market ended up having a pretty significant rally. And when the market rallies, everything has a beta of 1. Or if the market makes a really big move, or if the market makes a really big down move, everything has a beta of 1. It just means that everything's going to follow the overall market, right? If there's a significant move like there has been. So because the market rallied, which was making my decision of only buying the puts, I guess, wrong at that point, I still was confident in my opinion. I had a game plan. So what do? Buy 5, 32.5 puts for $205. Today, EMF sold off. The first thing I did was the calls, I took 5 of them off. So my 30 puts, I made this a little scalp where I took money out of the market, and I call that financing the trade. Now, if I go back to the options, EMF position, you can see I'm long 10. I started out long 10, then I bought 5 more. I traded that 5, but now I have long 5 of the 30 puts, long 5 of 32.5 puts. Right now I'm up $638. I believe the market is gonna trade lower. I'm just freaking bearish. So I do want to buy calls. I do not want to speculate on earnings that EMF's going to get dragged down through earnings. I'm trying to finance my position to make enough money that by the time we get to the earnings release, my P&L is a break even, my downside's a 0, and my upside get a ton of movement. I can make 10 grand. So that's how I'm looking at the position. That's my game plan. Now, if the market rallies a ton, then I'm going to have to adjust. If all of a sudden there's a vaccine, I'm buying very expensive volatility here. I would have to adjust. These options have 24 days, right? There's not going to be a vaccine in 24 days. I'm just saying that nothing's set in stone. I'll leave you with one last thought. I got into this industry because I just feel it's broken and it needs some cleaning up. There's too many people who are just getting taken advantage by so-called experts. This example of EMPH, again, go back and watch that first video. This is the second video. I will make a third video. I hope I make money. If I don't, I'm going to make a third video anyway, because I want you to see I have a game plan. I'm going to try to execute on my game plan. And then if I'm wrong, I just want to lose as little money as possible. Hopefully I can break even, maybe even make a little bit of money. I tell you what, if EMF trades down to 32 and then trades up to 38, I'm going to make money before earnings because I could take advantage of that volatility. Where I wanted to leave you, think about this EMF trade. When people tell you about returns, understand there's so many variables that go into what's the return of buying this strangle going into earnings. There's thousands of different permutations. So if anybody is telling you what your returns can expect to be careful. You can see I have a plan. I'm going to manage this position. I'm slowly going to wait to wave in those calls and buy those calls as the market goes down. That's what I'm looking to do. We'll see how it works out. Hope it helps, guys.